Okay, hello traders and welcome to this live intraday strategy webinar on SB Trade Desk. Today is, Wednesday, July 15th. Good to be with you guys here this morning. Kelly, Kyle, Mark, Permendra, Tommy, good to be with you. All right, so we just did get the release of some U.S. data. Here's what it looks like. It was the PPI figures for the United States. Some interesting data from the UK in overnight price action, charging some pullbacks here in also the British pound, which was the featured scalp last night. We'll take a look at that. But PPI figures coming in slightly better than expected, looking at zero point 0.2 for the expectation, coming at 0.4. Core also beating expectations. So again, the inflationary picture here for prices, not really a major market mover, but nonetheless, at least we're getting some positive data here. So, some of the comments coming on the board right here. Eileen saying these markets are very stubborn and unable to make up their minds as some of my clients these days. Yeah, so when we find ourselves in a range-bound market like this, you got to remember, guys, there's a lot of unprecedented stuff happening right now, specifically with what's happening in Greece, with the back and forth rhetoric we keep hearing from the Fed. Yes, we're going to tighten. Don't stress when we're going to tighten. Stress the pace of the tightening and not yada, yada, yada. Markets are digesting a lot, right? But we just got to know where to look, Eileen. The opportunities are definitely there. So we'll try to keep you in the right focus here. Let's jump right in. So, quick look before we get started, as usual, at the relative performance of the greenback versus its major counterpart. Here's what it looks like so far in this session. You can see a split performance here. Aussie's top performer up 0.23% so far in the session. Kiwi down 0.21. And then you see a whole lot of lackluster price action with the euro, yen, sterling, CAD, all pretty much just dilly-dallying around the median here. Pretty much positive, negative, not much going on, right? We highlighted our scalp setup yesterday in the British pound. There was actually a really nice scalp setup in that last night, and the short actually worked pretty well. And the Aussie yen also was highlighted in yesterday's setup. I actually put a piece on that on Daily FX as well yesterday, so we'll review that in a moment. The highlight, and before we go any further, I just want to remember, guys, today is the Humphrey Hawkins semi-annual testimony before Congress, and that's basically when Yellen gets grilled on her decisions for monetary policy. Listen, it's a very telling time because it's when essentially Congress really gets to press her on matters of monetary policy. So where do they see the economy moving forward? Justification for holding rates down this low. The outlook for interest rates and what's holding, what they're looking for to trigger a move in monetary policy, yada, yada, yada. It's basically all the same questions we get in the quarterly projections, but can be very telling. And certainly the Humphrey Hawkins semi-annual testimony, a lot of times we'll see interest rate expectations shift greatly because of those question and answer periods. So we'll be watching for that later this afternoon. It's a 2-day thing, so we'll see that spill over into tomorrow. But looking at the relative performance for the greenback and where that is to start off the session, we're right slap in the middle of the range, guys, of the key range that we've been talking about all week long. We've tapped the bottom of that range. We've tapped the top of that range, and that's still the range in focus. You're basically looking at 12,008, that 100% extension, and the same support we've been talking about, 11,924, 11,935. And that's still the range we need to clear to get the next directional move here for the greenback. You can see, again, I don't want to bore you guys every day with the same stuff, but momentum still holding sub 60 yet again. And we'll look for a change that. And as long as this condition holds, and as long as we hold below this, the risk is for this thing still to see a little bit more of a spill to the downside. The scalp, which I did include on yesterday's radar charts, is what you want to be focused on heading into today's event risk, okay? Here's what the 30-minute looks like for the greenback. Where art thou? Where art thou? There it is. All right, so we've still been holding the levels pretty well. Yesterday we saw a tag of that median line off the high that we were adding. I think we added this right in the webinar actually, and that's going to be pretty much the focus heading into today's event risk with Yellen. So we'll either need a concrete break above 12,008 or push below. Let's get this straight. 11,935 would be a break of the weekly opening range, would be a break of the median line confluence, and that would be sort of a near-term validation for a push lower. A break below 11,024, okay, would actually put into effect a possible double top scenario. Okay, and if that is in play, what we'd want to do is check out a measured move. Oops. And that would actually give you a measured objective move down into 11,818. Okay, if we make it through the underbelly here. So you have a lot of different things that are possibly in play for the dollar index. At the end of the day, 12,008, a break above that, and you're done with this scenario altogether. You'd be looking for a move past 12,040, 12,037. That's actually the highs that you made back here in June. It's also a longer dated 764 retracement from the decline that you made back in 2015, or excuse me, back in April. So that's sort of the key levels on both sides for the dollar index. And basically, based on what Yellen says today, you'll see a lot of play in this index. And specifically on the back of the fact that we're seeing interest rate expectations starting to get pushed out again on the back of some weaker than expected U.S. data. Of course, everything that's happening overseas with the concerns that we heard mimicked in the minutes last week with regards to the slower growth in the first half, the impact that'll have on sales. We saw retail sales yesterday were weaker than expected, right? Everything is starting to materialize to where you might see the Fed soften that approach. Hey, you know what? Probably going to have to wait on that first interest rate hike. So, we'll be looking for a clearing of this key range. So again, people who are, traders who are trading stateside can't trade this asset. It's a great way to be able to gauge base dollar movements. Where does that put us on the majors? So here's what we're looking at across that spectrum. Let's start off with the euro dollar. So the euro was also highlighted on yesterday's radar. I put it on the radar, guys, because I haven't really been too keen on getting involved in euro scalps per se. Where are you, euro? Here's what the euro daily chart looks like. So we have to stay disciplined to our strategy, and as we said yesterday, guys, 10,065, 10,055 was the bullish invalidation level. So, I haven't been taking any long scalps since then. The break below shifts the bias to the downside, but at the same time, if you look at the scalp or the near-term chart, you saw some divergence into this low here. You saw us break above the median line. Yesterday tried to make it through that key 65-55 region. We failed miserably, came right back, and there was sort of lackluster price action into Asia trade last night. So yesterday, this is what we were looking at when it kind of was drifting into this upper median line parallel. We kind of broke it, tested a support, and we've been dilly-dallying here ever since. Going to be really susceptible to continued headlines out of the region, but basically, as long as you hold below 1065, 1055, you're at risk for continued moves lower. And in fact, ever since the turn and the break below that region, okay, you can see that the momentum signature has remained bearish, guys. Here's the break below 1065, 1055. It's the first break below 40, a concrete break below 40 that you saw since last week's low. On the rally into that key confluence region we were talking about just yesterday, right during the webinar. 60 holding momentum, rejection. In the last rally right here, you broke the upper median line parallel. We're looking for some sort of build up here just to get through. Failure again ahead of 16 momentum, right back below 40. So I'm not really keen on, getting on the short side per se down here. Remember on the daily chart, you're still coming up into that in 109.50 level, which is again last month's low. It's the 764 retracement of the advance off of the low from May. Excuse me, I'm a little under the weather, so my voice might sound a little bit raspy here. Uh, but long story short, I think you need to wait a little bit more for clarity here on the euro before you get. Let me snap these lines for you guys. Before you get too excited on near-term prospects here on this pair. All right, so you still look for the Confluence there at 109.50 for near-term support. If you get a reaction in the dollar that is broadly negative, meaning Yellen comes out, you sort of see some dollar play, the price action sees a large spike in the dollar to the upside, which slams euro lower, that would be an opportunity of which I would possibly like to fade euro losses for a scalp, okay? It's very hard for a trade that is so stretched to the downside to see an event like today just fuel a continuation lower. And that's kind of the mentality I'm thinking about with a lot of the crosses. So, keep that in mind. We'll keep euro on the radar. Haven't really made any plays on this week, but certainly will be central focus, specifically as we get deeper towards this whole Greek debacle nonsense. Any questions on either of these radar charts, either for the euro or for the dollar? Okay. All right, let's jump right into the actual featured setups from yesterday's update with the British pound. So, here's what good old sterling was looking like yesterday. And the major thing that we wanted to highlight real quick yesterday was this confluence region of resistance. You're basically looking at the upper median line parallel for this formation off of the highs for the year. This is your May high. This is your June high. Okay. Basic trendline support off of the lows of the year. June lows. Nice pivot break, which was the origin of the drop for this month. Now resistance. Okay. Add to that, right along this region, you had those swing lows for the final week of trade in June as well. Basically gave you 56.70, 56.60 as a major resistance here near term. Okay. The underbelly of the trigger, which gave us the break to the downside also, now being tested as resistance and momentum. So you have a lot to work with here on the pound. Here's what it looks like on the 30-minute. So a couple of median lines here just off the lows. This is not even a pitchfork formation, guys. This is a basic trendline support. You slide that parallel to the highs that you made here. You can see really nice pivots. You slide that parallel to the highs you made on Friday. You can see that has multiple tags and coincided with a near-term upper median line parallel that we just looked at on the daily chart. Right? So it's a real clean structure. And Eileen, yesterday we were talking about how do I know what setups I want to be looking at? You know what I mean? We talked about, I think it was yesterday we were talking about the dollar yen and the euro dollar. And you were asking, well, Mike, how do you know, or what made you look at the dollar yen as opposed to the euro dollar, right? Well, the cleanliness and the clarity of the technical setup is paramount, Eileen. That's the only thing that really matters, right? And on the sterling, I thought this was probably one of the cleanest setups coming into today, and which is why it was highlighted on the intraday setup. Again, when you have these parallels, guys, that offer such clear pivots in price, it gives you all that more validation. Also, the fact that the momentum signature off the lows here has been getting you some pretty radical divergence, which is telling you that the trade is getting tired. Okay, higher high in price, higher high in price, higher high in price, lower high in the oscillator, lower high in the oscillator, lower high in the oscillator, right? So there wasn't any necessary triggers per se on the 30-minute, right? But if you bring in the 5, Excuse me, guys. So if you're bringing the 5, you can see that the opening ranges have been very clear. Also, the divergent signals that you saw, not only on the 30-minute chart, but also on the 5, have been very clear here as well. So even through the open of Sydney, you saw even the Sydney highs that were being put in just during that session was giving you divergence. And then the signal for the actual short side, I'm on a different computer, so I don't remember the actual one I used. It's the one that matched up with that, whatever that range was. Might have been something like that, which is pretty ugly. No. Oh, I'm thinking about the Aussie yen. Guys, this one was probably just the 50 break in and of itself was enough. Remember on the relative risk to reward is going to be paramount. So as this thing was carrying through 56.60, 56.70 was what we noted in yesterday's intraday setup, specifically on that major key rally into that 56.70 threshold, which was the confluence region of the upper median line parallel, that median line parallel from the ascent off the lows, and the fact that you had the ongoing divergence in momentum. Gave you a really good risk to reward. You're looking for about 30 pips, 29 pips on the scalp, so you're not willing to risk more than 29 pips on the stop. Guys, give me 1 second. I need a glass of water. Give me 1 second. Sorry about that. Geez, so much talking in the last couple of days. I think I'm finally losing my voice. Oh, sorry about that. Okay, so Graham saying, Michael, please to see that you can't find a 3.5 minute trigger on that Sterling this morning. I couldn't either. I just sat and started watching. So Graham, yeah, here's the thing, and we talked about this yesterday briefly, guys. Remember, the 5 point or the 3 point trigger in general, an RSI trigger is not necessary. It's there as a help. If it's there, we can find it. It can add conviction. It can tell us when the proper timing to enter the position, but it's not necessary. It's not like if there's no trigger, I can't take the trade. The most important thing for your position is always going to be the risk to reward, okay, and the relative positioning of where you are in the technical play. Are you near major key resistance? Or do you have clarity on the position or the structure that you're trading within? Okay? And, if that clarity is there on both those fronts, now a trigger, you're just talking about timing. You're just talking about relative timing and being able to jump in at a more favorable rate. So I hear you, and I could have sworn there was a trigger there. I jumped in yesterday. I think I'm going to start saving the 5-minute triggers here every day as well, just to kind of have them with me here, but I can't remember which was the trigger that actually got me in. It might have been something like this. But in any event, you guys get the picture. Keep in mind also that move that you saw there on the 5-minute chart and the decline in the reversal off the highs here was not random. Okay, this was at 4:30 in the morning here in the United States. It was the release of the UK employment data, which looks like this. Okay, it's pretty interesting to see the employment data come out the way it did, because we've been getting some pretty decent numbers, but weekly earnings came in weaker than expected, 2.8% versus 3%. Where's the ILO? Dun, dun, dun. The ILO unemployment rate 3-month rolling, that came in at 5.6 versus the expected 5.5. So you did get a little bit of bump. Jobless claims, you expect to see that contract by 9,000 and actually grew by 7,000. So the data front was a good prompt also to give you that reversal trade. But in general, what I wanted to keep in mind, guys, is this. We're looking for the structure to maintain or to be respected, right? So even if you miss that pullback there, keep in mind you're coming into near-term support, 155.88, 155.87. That's not only the initial high that you spiked here for the week, for the initial opening range, but also a pretty nice pivot in price going back a couple of weeks here. Okay, so what's the game plan moving forward here, Mike? Forget what happened last night. What are we talking about moving forward? So from this point, you're either looking for the U.S. trade to give you a nice opening range setting up right above this median line, looking for possible long exposure off this region, or in this scenario that you get a deeper cut below this, we'd be looking for a possible re-entry on the long side down here. Okay, and this is the only thing that would invalidate the broader uptrend that we're working with as of now. 155.11 is last Friday's close, i.e. the weekly open. Okay, so as long as we stay above that region, we'll be looking for long triggers while above that region, while within this structure. Okay, keep in mind the reason also that we're looking higher, guys, is that we've been breaking some median lines that we were following from last week. If you remember, we were following this formation to the downside. We've been breaking these on the way up. Okay, momentum signature clearly changed from being bearish to more constructive. On the way down here, momentum holding 60, deep cut into 40, failure to break above 60, deep cut into oversold. And then here's the reversal break on Friday. Took us way into overbought territory. Failure to hold below 40. And now heading into resistance, some divergence, pullback. We'll want to see momentum hold 40. We'll want to see price hold support. And inevitably we're looking for a topside break. 157 into 157.09. This region here is really the critical resistance region that you'd need to get through to mark the broader resumption for the breakout trade. Okay, 157.74 would be the initial target on such a scenario. Let me take this back real quick. Guys, you hear me talk about these, especially for those of you who've been with me for a couple of years. These are my favorite confluences. 618 off the 618 off the high and a 100% extension off the low. Those confluences tend to be the more fruitful breakouts or rebounds. So this is definitely going to be a major inflection point for me. A break to the top side. You're looking for a 70 pip run. 157.74 is actually the May high day close. So if we take the high that was put on the 14th of May, the close of that session, which was a very decent pivot in price, comes in right at 157.74. Okay, and then you look at 158 as also a decent pivot. And that's going to be the next upside target beyond that. So near term, looking for support near 155.88, looking for support deeper near 155.12, 155.11, looking for long triggers in those regions. Questions on the sterling? Yes, the parallels on the sterling and divergence, saw them for sure. Sorry for your voice. No worries, guys. With the dollar consolidating, how about sterling CAD? Looks constructive on 3. On the 30. Let's take a look, Jay Jackson. Agree. I should have just taken it on 2 points and adequate risk to reward, Graham. Yeah, I mean, Graham, I don't want us to be too rigid, and that's one thing I tried to address yesterday in the conversation, guys. You know, we talk about, hey, Alan, great to see you, man. We talk about, you know, RSI triggers and opening range strategies and, you know, being able to ascertain what price action's doing, because at the end of the day, price action's everything, guys. The only indicator that really will never lie. Right? I hate to use cliches. Um, but also, we don't want to be too rigid where we miss opportunities because one of our quote unquote triggers isn't there, right? That could be a detriment too. So just keep that in mind. Um, Jay Jackson with the dollar consolidating. How about Sterling CAD? Haven't really looked at Sterling CAD. Let me take a look. I feel like Jamie said something to me about this yesterday, and I kind of laughed. It might have been a different CAD pair. Yeah, it wasn't this. Um, what can I say? She's a beauty. Sterling CAD, again, one of my trades of the year for daily FX was Sterling Yen and Sterling CAD. I don't know if this is necessarily for me, Bernard, a scalping type of candidate. I kind of feel like this is one of the trades that you want to kind of get in and sit, maybe a swing candidate. From a scalping standpoint, it becomes very difficult to trade or to get in and out of positions that are fresh multi-year highs that haven't been seen. I mean, last time we were up here was in 2008. But let's see if we can put something together for you. Give me 2 seconds here. Objectively, so if we take a step back and throw everything out the window, all this analysis you're seeing, don't even look at it. Objectively, July opens, July sets a high, July tests the low, July tests the high, next day tests the high again, fails. Yesterday, finally closes above the high. To me, that's a validation of a monthly opening range break. Okay, so this is going to be the initial monthly opening range break. So at that's face value, at the face value for that strategy, um, Jay, we would be looking higher into the close of a July trade, or at least for a late July high. Okay, um, so that's one very crude way of looking at this at a very objective manner. The only other thing I'd be looking at here is that momentum is testing resistance at 70. We haven't seen a 70 breach in momentum since back here, which was January of this year. And certainly that break above 70, you know, led to another, what is that, 189.50, another 1,000 pip rally. So it's the possibility is definitely there. The next major key level I have on tap, and again, I haven't done any recent analysis on this, but is a 618 retracement from the decline off the highs, I think from 2007, if I'm not mistaken. Yep. Yes, January of 2007, the 618 retracement of that decline comes in at 202.32. A little bit of ways away from where we are now. Raj says, how do you catch such trades? Wow. Yeah, so Raj, a trade like this, you know, you want to catch or you want to take it on a much broader stance. You want to, these are wider range trades that you want to keep. You know, you don't want to be looking at intraday trades for this. You don't want to be looking at 30-minute charts or 2-hour charts. You want to be looking at daily, weekly charts for trades that are so, um, you know, far out like these are, that have such potential for major, major moves. What's wrong with this? Oh. So, for example, the entry on this trade would have been either back in April with this trigger break here, as this thing was testing near the yearly low, right, with a stop against the yearly low. You'd have to put like 100, 200 pip stop on a trade like this, and you kind of just let it sit out. It's just not my style of trading, though. So again, I don't want to waste too much time on this, Jay Jackson, but near-term targets, as long as you stay above 195.55, I think you stay constructive. From a weekly standpoint, you still look higher above 198.60, which is the objective opening range weekly high. But you are marking some pretty strong divergence in here into the high, so possibly look for a little bit of a recovery to the downside. If you want to still jump on the long, but I'd have to look a little bit way deeper into this to get you some scalp targets. Jay, give me some information. What are you doing with it? He says, I entered long by fading the 4:30 news. Entered long by fading the 4:30 news. Okay, so what's your target? What are you looking to do with this? It's got a real healthy ATR, right? 43 pips is only a quarter of the daily ATR. So as far as an intraday strategy is concerned, you have a lot of time. He says, don't have one. Okay, well, I can't leave you like that. So let me. And where's your stop on that one? $98.83. Okay, so just below the lows, right? Hmm. Yeah, nothing even kind of just pops out on me on this one, or pops out as a possible area of which we want to. Listen, if you're looking at this from a scalp standpoint, you really need to have your stop. I mean, I wouldn't have that stop any lower than where you have it right now. As far as a profit target for the upside is concerned, here's what I would say. The momentum signature looks still very, very healthy, and this is what I would say. Channel MLP is about is about the two handle, says Jay. Yeah, that's what I was just eyeing out right there. This is what I would say. The momentum signature looks still pretty good. You're getting waning momentum, so it's definitely looking a little bit tired, like it could turn. But look at every pullback since the low that you made into Friday and the start of the week. 40 hold, 70 break, 40 hold, 70 break, 40 hold. If this starts to show you a little bit more of a capping here as this runs up, I'd start to fade out of that position near the two threshold. I think you're on the right track with this, Jay, and I think you get a much better entry, to be honest with you. If you're a little bit more patient on the pullback, I think you get a much better entry. So if you're trying to use this as a scalp, stick with the scalp discipline. 43 pips, look to fade some off, take some in your pocket. and we'll look for a much better entry because I'm just not crazy about the entry right now. You're way close to the weekly high on a Wednesday. For me to start pressing along is a very, very tough prospect for me to get on board with. Um, if anything, I'd be looking for a pullback somewhere near 197.50. If we do get a topping process here, a retracement off the low, look for a 50, look for a 618, and then we'd be uh, a lot better poised, rather, to take advantage of some sort of near-term press higher to the long side. But from here, it's difficult for me to be excited about that position. Hope that helps, Jay. Does that make sense, man? He says, okay, I agree. Right on. All right, cool. Okay, sorry we got a little sidetracked there, but I wanted to help out my man Jay. Let's jump right back into the setup. So that's sterling dollar. We went over sterling CAD. I also wanted to go over Aussie yen. This is a setup that we highlighted yesterday. Sorry about that. That we highlighted yesterday on Daily FX as well. So, Aussie yen. The Confluence resistance region that we were coming into was just ahead of the 92.26. It was basically the 92 handle. You're looking at the median line parallel off of the highs for the year. You're looking at a former trendline support. This is a long dated trendline support. It's not just trendline support off the yearly low. If you go back long enough, it actually dates all the way back to the lows from 2009, specifically January of 2009 or early February. Okay, we tagged it again in May of 2012. Okay, we came into it again this year, specifically in the start of the year in February, tagged it again in April twice, and then we broke it early this year, and not only was it a break, but it was on a breakaway. Okay, a breakaway gap. So we gapped. We actually did come back to fill the gap, but we pushed lower. And that all was coming to a head at the Confluence region just around 92. Add to that the operative median line off of the highs here was right there. So right off the bat, we were like, you know what? Take a step back. This thing looks pretty interesting at this level. If it does break through, we're likely to see a major, major rally higher, right? But near term, you want to be a little bit more, a little bit more reserved at that region. Also note the fact that the Aussie's been making a pretty impressive turn as well. I'm going to sidetrack your attention really quick to this. The Aussie has been showing pretty strong resilience despite the fact that we've seen the dollar continue to press higher. The Aussie's been holding this ridiculous range, okay? Despite gains that you're seeing elsewhere for the dollar. So, with that said, that was the focus on the Aussie yen daily chart. Here's what the intraday looked like. Oh, and one other thing is the weekly. Okay, this was on Daily FX as well, and I just wanted to highlight one thing: that 2011 swing high, right around the 90 handle. Yeah, it's pretty much the swing lows that we saw earlier this year, and it's pretty much the yearly range, right? The Aussie yen range is simply being tested, guys. And that same trendline support that we just talked about, right, now being tested as resistance. So if we get through that, well, look to hold the same exact range. Very simple. Here's the 30 looks like. All right, so the thing came right into the median line support. Okay, you saw that break below that near-term trigger, come right into 40, and what happened? Rebound and held super sharp. And in fact, on this one, you saw that rebound go right through that trigger to the upside, go right through the Asia Pac opening range highs, and take us right through the 92 handle, taking out the 92.24 target, which again was this 38.2 basic retracement off the highs, not a major target. And here we are again testing the median line as support. So as long as we continue to hold these levels, guys, and again, this is same pitchfork that we're looking at on the daily chart. As long as we continue to hold these levels, you want to stay constructive within the confines of this formation. Very simple. Very simple. And we'll still keep the same, bullish invalidation level. We won't change that at all. but broadly looking to buy pullbacks while within this formation. Below 92, you're at risk. So again, we haven't seen a close below above that region yet today, guys. But if we do close below this region again, you're still at risk, right? We want to make sure that we see a close above 92 to really get the validation. Topside break above, and you're looking for a rally into 93.22. And this is, I think, where you start looking for a little bit more of a critical resistance hold. It's a 50% retracement of the 2014. I'm sorry. Almost the 2015 range, not quite. But basically the decline from the May highs. You have the upper median line parallel, which is there. And then a pretty decent pivot in price. All right, so that's the Aussie yen on the near term as well. Any questions on that setup? Raj says, Mike, can you look at Kiwi Dollar at some point? I sure can, Raj. If my voice holds up. Here's what Kiwi Dollar looks like on the daily. And here's what it looks like on the 30. So this failed. Obviously, it was not the right idea that we looked at yesterday. I think we added this in the webinar yesterday. Let's snap these levels real quick. Yeah, guys, listen, there is no play for me on Kiwi Dollar, period. Remember last week we added this green line, which was simply the weekly opening range high. And we said, you know what, Kiwi's trading near the, Kiwi's trading near the lows. And we said, you know what, as long as Kiwi continues to, in order for us to try to even play some sort of Kiwi reversal, let's just go ahead and put this opening range here. And to see if it breaks the opening range high. Listen, if it breaks the opening range high, we'll look to play the long side for the Kiwi for a possible swing higher, right, into the median line. So what happened? It broke the opening range, and in fact, it did give us a rally of the quarter ATR 20 pips to the upside into the median line. That failed, and in fact, what happened at the end of the week, we pulled back and pretty much closed right at that opening range high. So while that's still in play, the start of this week hasn't really given us an opening range break from a weekly standpoint. He says, we are long from the swing side of things. Right, yeah, I know you're long on the swing side of things, and the swing is looking for a target, I think, of 68, if I'm not mistaken. And I think his stop for Jamie, he was telling me the stop is somewhere near 66.50, 66.60. I think it's coming into tuition right around here. But again, I look at things from a different standpoint, guys. So if you have, those positions, you're going to want to talk to Jamie in the midweek strategy webinar, which will be today at 1 p.m. Eastern. So stay tuned for that. And other than that, for me, I'm going to need to see a little bit more conviction for a radical turnaround here, or a little bit more of a press through a concerted weekly opening range high to get this thing moving. Remember, since the start of July trade, guys, the range has actually been pretty darn tight. Okay, we really haven't done that much this month. In fact, the daily chart looks still pretty clean. The game plan, for me at least, still hasn't changed, I want to say. Still, like, my ideal area of which I would start to look possibly for entries would be somewhere in the range of, that S1 pivot, somewhere near 66, the 66 handle. Obviously, based on time, that'll change, but, we've been holding this slope now. It's ridiculous, guys, for 4 months. The precision of which we've held the upper median line and lower median line parallels is absurd. So, unless there's some serious change in the behavior here, which hasn't really come out to me yet, um, I'm just not going to be interested in necessarily trying to fight this yet. All right. All right, guys, I do want to apologize. I'm just slowly losing my voice here. I don't know if I'm going to make it through the day. But some real quick setups that we just want to talk about. Again, Aussie yen looks like it's going to make that break. Look for the 40 break in momentum here. If you do see it, we'll look for a move into that 91.24. And again, this was the open or the close of Friday's trade. We gapped and filled that, but that's going to be the near-term bullish invalidation level for the Aussie yen. But a couple of different things on the risk front. We talked about the DAX rather. That's on the radar charts as well. The radar chart from Tuesday or Monday rather called the 11,524 initial target. That got taken out. Secondary target was 574. That got moved. Okay, that secondary target was based on the 100-day moving average, but that's moved to 583. So that's now the secondary target. And then obviously last month's high that hasn't changed, still 11,634 as well. So that continues to press higher. Momentum still has room here for a rally, at least to test that 60 barrier to the upside. But as long as we hold above the median line, you still need to be looking higher here in risk, even on the German or even on the DAX rather. Oil making huge headlines. Everyone's looking at the major swings that you're seeing here in crude. You might have seen Jamie yesterday put out an awesome piece on CFDtrading.com, basically highlighting the same levels we've been looking at here, guys. So if you recall, again, 51.97 to 52.24 on a closed basis, that thing continued to hold as rock solid support. A median line off the lows here. This is something I added yesterday. Actually, Jamie had this one on his charts. Actually caught the lows here with some more precision, even on the stretches. Long story short, looking for near-term resistance at 54.21. Okay. And then 56 is going to be the near-term bearish invalidation level. So I do expect that we could see a rally or at least a rebound into those regions where you'd start to look to reassert possibly the short side. Near-term, this is your major key support here on crude. Don't really want to be looking for fresh short exposure unless you get through those regions. How does the pound look for a 155.88 region as support? Not seeing a trigger. My man, cable's coming up on your suggested support area. Oh yeah, cable. Let's go back. Right. So, market hasn't opened yet, right, guys? So I won't be jumping into a position from right here. But let's bring up the 5-minute chart. Okay. Off the high in price. We'll watch that trigger there. All right. And this is how I'll leave my charts, guys, heading into the US Open. Oops. Okay. And we'll want to see if we can get some sort of basing alongside trigger, maybe some divergence into the lows, followed by a long side trigger into the US Open. Might be a good play against last night's or against yesterday's US session low. Would be a nice stop. If it crashes through this and US Open at 8:30, 9:30 continues just to pummel lower, well, I'll sit on my hands and we'll be looking for a possible entry as close as we can to that 55.11. Again, last Friday's close and the bearish invalidation level, or the bullish rather, invalidation level. I'd like to get as close as I can to along off that region near term if we break this level here. All right. All right. Guys, I'm going to go ahead and wrap things up here. Again, I really apologize for today's webinar. I'm fighting this cold now for a couple of days, so it looks like it's getting the best of me. I hope tomorrow to be clear-voiced and a little bit more of a clear mind as well. Listen, keep things on a light foot as we get into the Humphrey Hawkins testimony. Typically, it's not one of those releases where you're going to see, volatility spur right off the bat, right? It's going to be a very prolonged Q&A session. They do tend to press her pretty aggressively, right? It's not like the Q&A where these are like very, rosy reporters who don't want to be offensive or crude. No, no, no. These guys really dig into her. So it actually tends to be a very telling time for where exactly the chairman stands in her stance on where the economy is exactly. So keep an eye on that over the next couple of days. And CPI data out of the United States tomorrow is probably going to be a big presser as well. So we'll keep our eyes on that. We'll cover it live tomorrow in the webinar. Again, same time, same channel, 8:30 Eastern. Until then, best of luck trading. We'll see you tomorrow, guys. Cheers.